question around the idiosyncratic stuff that you've been involved in. You know, when you wrote that original book, I vaguely recall you telling me that at one point in time, like one of your best investments that you ever made was investing in backing one of your friends that got into the investment business, Rich Pzena and Pzena Investment Management. That might have been one of your best investments. How did that come about? And, you know, what compelled you to make a decision to invest in another asset manager? It's kind of interesting, maybe an interesting story for somehow, maybe.
I don't know, interesting, but I went to school with Rich at Wharton, and we actually did a research project together, testing, and it ended up getting written up in the Journal of Portfolio Management, but it was testing Ben Graham's stock picking formula. And back then, you know, computers took up, you know, football field, and databases consisted of us taking a pencil and Standard & Poor's stock guides and writing down the information that we wanted to put into the computer. And so this was a big, long project, and turned out, you know, what Ben Graham had done 40 years earlier still worked, and it worked incredibly well. And we worked on that together, and I knew Rich from school. It's the smartest guy I knew at school. And so kept up with him. He was running Sanford Bernstein's U.S. equities, and he said to me one day, gee, I'd like to at some point go out on my own. And I said, well, if you ever do, I'd love to back you. I mean, it was one of the easiest decisions I ever made, and he's really one of the highest quality, smartest, nicest people I know. So, I mean, it really was just kind of easy. You don't get that opportunity too much in life. Just that was like an easy one. They don't throw you pitches like that ever. And,
that's awesome.
You know, it's been a fun ride, and, you know, I love Rich to death.
That's a good win-win. That's a good win-win story.